Do you know what Healthcare.gov does for you? Do you know what the Affordable Care Act is? What's the marketplace? Guess what? It's all the same. It's all the same. I'm going to be breaking down in a 3-part series for you all your health insurance options. Episode 1, we're going to get into today the Affordable Care Act, i.e. Obamacare. Who's it for? How does it work? Why would you want to use it? If you look here, I have in my notes, anybody with pre-existing conditions not offered group health plans. This is for people without getting company benefits. Your only option in the marketplace right now is to go to the exchange, the marketplace, the ACA, and get health insurance in your local markets. It's driven state by state. Options are going to vary literally by the counties you live in. What I want to do today is break down some of the prerequisites of what goes into exploring and determining which plan is best for you on the Affordable Care Act. As I said earlier, anybody with pre-existing conditions or expectant mothers or people who are going to plan on having a child, you need to be on the exchange. Additionally, there's a lot of benefits on the Affordable Care Act. That first word, affordable, is because there's federal subsidies now bringing down the premium costs for lower income households. We virtually give away free health insurance every day to lower income families. And you'd be surprised, even somebody making $100,000 and above as a family can still qualify for subsidies. So it's not somebody who's just making no money. When you're looking at the Affordable Care Act options, you want to make sure you're checking your doctors and where they participate. You want to know terminologies like deductibles, copays, coinsurance, and maximum out-of-pocket. Copay, coinsurance, deductible, max out-of-pocket. All of these are going to have implications for you in the selections of your plan. But before I get deeper, make sure you like, share, and subscribe, and hit me up with questions in this week's episode. So what's a copay? Well, most of you are going to have a primary care physician, PCP, not the drug, your primary care physician. When you go to see that doctor, you're going to have a copay, $5, $10, $20, $50, depending on your plan. If you need a procedure, you go and have appendicitis, you go to the hospital, they operate, you're in recovery, you got a $30,000 bill being sent to you. How does that play out? Well, first and foremost, if you have a deductible, that's your responsibility first. You have to pay the deductible. After the deductible, you want to know what your coinsurance is, because that's your responsibility after the deductible, where you and the insurance company, that's the co, where they're going to start paying some of the benefits in your plan, but you still have patient responsibility. Used to be in the day 80-20, 80% the insurance company, 20% to you. Obamacare a little bit different. Every plan's going to vary depending on what level you're at. We've seen plans that are 50-50, 60-40, 70-30, 80-20, 90-10, so they do vary. Guess what? The more you pay, the better your plan's going to be. Based on affordability, we're seeing a lot of plans where the coinsurance is 50-50. So you want to make sure you're doing your homework and understand what that liability is to you when you're selecting your plans. As your coinsurance goes up, we're using $30,000 here in this scenario, $30,000 for that appendicitis, okay, surgery. Your deductible's $5,000, so you're going to pay your deductible first. You have 50% coinsurance, and you have a $9,000 max out of pocket. What happens here? You're going to pay the first $5,000. That leaves $25,000 balance due. 50-50. Well, half of your responsibility is $12,500. Do you have to pay that $12,500? No. You have a max out of pocket of $9,000. So a $30,000 bill for a hospital stay tied to appendicitis, in this example, your maximum out of pocket is going to be $9,000. Now that's just for that calendar year. Come the new year, everything resets. Your deductibles, your max out of pockets, your coinsurances. In fact, the ACA runs from January 1st to December 31st. Open enrollment begins November 1st. So you want to make sure you're getting in front of your agent or Healthcare.gov, if you're doing it on your own, don't go it alone. Always make mistakes. You want to check with us. Part of what we do with our clients is help them get the best plans through ACA. And you know what? They pay us. Doesn't cost you anything to talk with us. If you call Healthcare.gov Direct, they're going to be order takers. They're not going to guide you. They're not going to really help you here. For no additional cost, you can get professional guidance from us and other registered insurance agents, health insurance agents out there. Okay? We like to say, don't go it alone. In this regard, January 1st, December 31st is your annual clock. Every year, that's going to reset. So your deductibles, whatever you do at the end of the year, is going to reset. Maximum out of pocket, all financial liability falls on the insurance company. Folks, the biggest thing I have in my conversations with clients today is understanding there's no perfect answer in the world of health insurance. Costs have escalated. Premiums have gone up. Plans are offering less. You're going to be frustrated. Trust me, we're all frustrated. What you need to understand is where your exposure is and where you're going to be protected. So we've covered the four basics: copay, coinsurance, deductible, and max out-of-pocket. There's another big reason why people are on the Affordable Care Act, and that's subsidies. I alluded to it a little bit earlier. Based upon your household income, the government is going to provide you a tax credit of a subsidy. Now, you are required to file your taxes within a reasonable amount of time so they can reconcile whether or not you are entitled to that subsidy. If your income is variable, if you're self-employed, you want to take advantage of the lower income, but be aware, if you get a big commission at the end of the year, if you're selling real estate and you close a big deal in November, well, that subsidy that you were taking can be clawed back and will be clawed back. So people get negative surprises sometimes when they're doing their taxes. My job is to make sure you understand the band of where those subsidies are and how much you're potentially going to be exposed to, and then help you make those decisions of how you want to go about using the subsidies. But the big reason why people use the Affordable Care Act, besides pre-existing conditions, is, let's say, a younger person starting out with their career, they're not getting benefits, maybe they're working 2 part-time jobs, they need health insurance. It's going to be free. It's going to be free for most of these kids, okay? Our kids are on plans like that where they live in their states. They're virtually paying nothing for their health insurance. That's what Obamacare is for. Why? Because the government wants people to have insurance. They want big unexpected bills to be provided and taken care of. And more importantly, they want to make sure that you're taking care of your health. Let's talk about that for a second. Big reason why people use or want to have Obamacare is called minimal essential coverage. Minimal essential coverage basically says that you're entitled to get your annual exam. Ladies, you get your lady visits, the mammograms and all that other stuff you guys have to go through. Your blood work, your annual exams. I'm at the age now, colonoscopies every 5 to 10 years. That's all provided to you under the wellness portion of 2S. Wellness is a big piece of MEC. Mental health, substance abuse, things of that nature are going to be covered under MEC. The government wants people to stay healthy, be in tune with their health, see a doctor on a regular basis. That's one of the reasons why this is a non-copay, non-deductible item. You're basically getting these visits for free, even though everything I just shared here, deductible, copay, and the like, that doesn't exist. If you had cancer, you had a heart attack, you had a stroke, you had that appendicitis, that's where those things are going to come into play. But your routine care in the Affordable Care Act, that's all covered for you. You got questions? I'm sure this is confusing. Hit me with questions. Give me a call at 844-PLANMAN. Make sure you like, share, subscribe. Hey, thanks for joining me today. Make sure you check out our next episode where we're going to break down private health insurance, who can benefit from it. Make sure you like, share, and subscribe. I'm your host, Bruce Weinstein, and we'll see you next time. Thanks for joining.
Always get it right, it's the Planman.